California, Ms. Waters.
Thank you very much, Mr. Chairman. I thank you, Mr. Bernanke, for being here today. And I suppose I'm in awe of the kind of power and flexibility that I have learned that you have, particularly in the execution of Section 13.3. But let me just ask, because I don't really know how these decisions are made. I don't understand how they're made. You participated using your Section 13.3 authority with Treasury, as you indicated, for the acquisition of Bear Stearns by J.P. Morgan and Chase Company, and to prevent the failure of American International Group, AIG, and to stabilize Citigroup and Bank of America. Now, I suppose when you all get together, you all have a way by which you decide which of these institutions are systematically or systemically critical financial institutions. In doing that, you make a determination about whether or not, for example, the Bank of America needs to be stabilized, and whether or not their attempts to purchase Merrill Lynch is in keeping with being stabilized and your support of all of that. What do you determine about Bank of America, and what are you concerned about in terms of using your resources to stabilize them? Is the purchase of Merrill Lynch consistent with your wanting to stabilize Bank of America?
So the Bank of America's purchase of Merrill Lynch was consummated, or was initiated back in September and approved by its shareholders in the beginning of December. And so that was a done deal as far as we were concerned. So our question was, when Merrill Lynch revealed these very large losses, that we saw a risk that the combined company, Bank of America plus Merrill Lynch, would come under severe pressure in the market and in some scenarios might fail or default. This is one of the largest financial institutions in the world. It has enormous numbers of counterparties and participates in many, many critical markets. And I don't think many people seriously would dispute the view that the failure of that company would have had enormously bad consequences, not just for Wall Street, but for Main Street as well.
Well, let me ask also, as you provide these resources under your tremendous authority, are you concerned at all about AIG and some of the reported ways that they spend money or have spent money? Does that concern you at all?
Of course. It's critically important that taxpayer money be well used and that there not be waste or abuse or fraud in those companies. But if you want me to take the time, or I can do it in writing, we have extensive controls. We have people on the ground in the company. We attend all the board meetings. We have a whole set of policies. We put in our own CEO. So we have quite a few checks and balances to make sure that the expenses that are incurred at AIG are legitimate business expenses that advance the interest of the company. After all, if we're going to get paid back as taxpayers, we don't want the company to fail. We want it to be a successful.
Did AIG continue to have expenditures that the average person would consider unacceptable after your support and participation with saving them?
There may have been a few occasions, but our overall view and our overall policy is that they have committed to making only expenditures which are have a strong business rationale.
Given that it appears that the policy is that these institutions are so important that no matter what, you have to save them because in the description of this kind of policy, it's just too detrimental to the overall economic system to allow them to fail. What do you think is your responsibility to the smaller institutions, the regional banks and others who have been begging for support and assistance forever?
Well, of course, all banks were eligible, for example, for the capital purchase program and wherever
yes,
possible.
but they must be, again, as you have described, they must be stable institutions where you're not taking any risk, but the game changes if you're too big to fail.
Well,
how can we correct that?
Two comments. The first is when we get involved in a too big to fail situation, usually the terms are much more onerous and difficult. For example, with AIG, we impose much tougher conditions than we would on an average bank taking capital from the TARP. The second comment is repeat what I said earlier. Too big to fail is an enormous problem. We are very unhappy with this problem, and we think that it should be a top priority to fix it as we go forward so that this situation doesn't arise again.